Hello, ladies and gentlemen. The goal of this video is to summarize 4 interesting lessons from the book Unknown Market Wizards by Jack D. Schwager. The book is essential reading for all lone wolf traders, i.e. people who want to reap the rewards of financial trading without the infrastructure or support of hedge funds, investment banks, etc. Please note, if you would like to purchase your own copy of Unknown Market Wizards, then please feel free to use the Amazon link below. This video will be short because I would like to focus on lessons that you'll probably only find in Unknown Market Wizards and not in any other trading books. So, let's begin. Lesson 1. Use probe trades. On page 14 of Unknown Market Wizards, the book discusses what Peter Brandt learnt from his mentor. The book states the following, quote, "While he was buying into weakness, he wouldn't just put on a full position and hold it. He would probe the market for a low. He would get out of any trade that had a loss at the end of the week and then try again the next time he thought the timing was right. He kept probing, probing, probing." End of quote. When I read this paragraph, I knew I wanted to develop some theory concerning the use of probe trades. The goal of a probe trade is to find out if a market is undergoing a trend reversal. So a probe trade involves picking market tops and market bottoms. This style of market timing is notoriously difficult. Therefore, in terms of risk exposure, probe trades must be small. But how small? Well, in order to address this question, we will need to apply the concept of a non-concentrated trading strategy. I have discussed the definition and use of non-concentrated strategies in my video titled Trading Mindset Masterclass: Become Comfortable with Being Uncomfortable. I will leave a link to the video down below, and the discussion begins at the time mark of 11 minutes and 17 seconds. But basically, a non-concentrated strategy involves splitting a cash allocation across 3 to 5 sequential trades. Now, there are 3 types of non-concentrated strategies: incremental, decremental, and distributed. With an incremental strategy, as a market moves in your favor, you increase the risk exposure of your trades. With a decremental strategy, as a market moves in your favor, you decrease the risk exposure of your trades. With a distributed strategy, as a market moves in your favor, the risk exposure of your trades remains constant. The easiest way to use a non-concentrated strategy is via the use of triangular numbers. Allow me to explain with a simple example. Suppose you want to instigate a non-concentrated position across 4 trades whereby the intended final risk exposure is 10%. If the position is distributed, then each trade would have a risk exposure of 2.5%. If the position is incremental, then trade 1 would have a risk position of 4%, trade 2 would have a risk exposure of 3%, trade 3 would have a risk exposure of 2%, and trade 4 would have a risk exposure of 1%. If the position is decremental, then trade 1 would have a risk exposure of 1%, trade 2 would have a risk exposure of 2%, trade 3 would have a risk exposure of 3%, and trade 4 would have a risk exposure of 4%. So, we can define a probe trade as being the first trade of a non-concentrated decremental position. Lesson 2. Move your stop loss to your break-even price as soon as possible and when appropriate. Long-term trading success isn't about knowing when to exit a profitable position. Instead, long-term trading success is all about making your stop loss orders as profitable as possible, as quickly as possible, while still respecting the typical gyrations of a market. So let's add a little bit of mathematical rigor to this insight. Let TD equal our data tenure, which equals the time horizon of our price charts, which equals 52 weeks typically, which equals 260 calendar days. And let TW equal our average winning tenure, which equals the average holding period of our winning positions. Now, typically, TW approximately equals TD divided by 2, which equals 260 days divided by 2, which equals 130 days. Let us now define the following. TBE, which equals our break-even tenure, which equals the maximum amount of time we are willing to wait until we move our stop loss to our break-even price. And tau BE equals our break-even ratio, which equals TBE divided by TW. Within the context of our model, we can approximate a suitable value for our break-even ratio via a quote from page 18 of Unknown Market Wizards. The quote in question is from an interview with Peter Brandt, and it reads as follows, quote, "I want to have my stops at break-even or better within 2 or 3 days of entry." End of quote. So let TBE equals 3 days. This gives us tau BE equals our break-even ratio, which equals TBE divided by TW, which equals 3 divided by 130, which approximately equals 2.3%. Lesson 3. Fade the financial media. In my video titled Habits of Successful Traders, I outline the perils of listening to the financial media. I will leave a link to the video down below. Pages 68 to 70 of Unknown Market Wizards serve to strengthen my point. So, if you can't generate high quality trade ideas because you do not have access to high quality data, then just do the opposite of what the financial media is saying. But make sure market direction is on your side. In particular, you might want to take contrarian positions against the talking heads on CNBC. Please refer to page 69 and page 70 of Unknown Market Wizards. I will leave down below a link to the YouTube channel of CNBC television. Lesson 4. Always have a side project. Unknown Market Wizards contains an interview with Richard Bage. Consequently, on page 104 of the book, there is a quote from Richard Bage, which states the following. Quote, "I have found that I trade much better when I have a side project." End of quote. This quote is insightful because if you plan to become a high stakes trader, then 80% of the time you will be doing nothing. Though during these periods, you might spend a little bit of time managing your winning positions. So during these nothing periods, make sure you do something constructive. For instance, you could analyze the financial reports of a company, experiment with trading algorithms, read about the technology concerning a specific sector, etc., etc. The key is to realize that what you do during your nothing periods will determine your future as a trader. Final thoughts. Generating big returns via financial trading is a lonely and disheartening endeavor. However, Unknown Market Wizards is a useful companion for all high-stakes traders who are looking for inspiration and valuable insights. If you have any questions, then please send me an email or leave a comment down below. I will try to reply to all questions and comments within 24 hours. Thank you for your time and happy trading.